Hey, Chris, good morning for me. Good evening to you.
Good morning. How are you doing?
Doing pretty well. And actually, now that I'm thinking about it, I should probably change it to Chris Barber. There we go. Make it a little less formal on the name title. But yeah, happy Friday to you.
Yeah, I'm never sure where to go with Christopher or Chris, but yeah, Chris is the usual one. Yeah, it's nice. Yeah, nice here in the UK. Looking forward to the weekend, so can't complain. We're just finishing up here for the day.
Hey, yeah, it's one of the last things you have to do before heading off to relax for the weekend.
Yeah, exactly. Yeah, I think straight off this, I'll be putting the toddler to bed, so which is a nice thing to do. So yeah, I'll go from this to kids stories.
I'm glad to get you on as well, finally, too. I know we've had some interactions between you, me, and Steve over with some of our chats with my second company for analytic endeavors. But I appreciate you also stepping in for the live stream this week as well for a replacement. So that's much appreciated.
Yeah, no, thank you so much for having me on. And see, we chatted before about how much you've got on this channel and how it's grown over the last 5 years, is it? So yeah, it's a really
Yeah.
real pleasure to be on. And I see you've got Daniel lined up as well for Tabular Editor, and I'm a huge Tabular Editor fan, so I'll definitely be tuning in to listen to hear what Daniel has to say. That's always great stuff.
I'm a little excited for that one. I think it's going to be have a good conversation on both in the age of AI, but also in the with the continued hardening of Power BI Desktop and some of the pro esque features that are being added to it. Continuing to talk about some of these cornerstone needs for that Tabular Editor will continue to fill that won't ever actually be filled by the desktop natively. In summary, like the quote that I remember from Rui Romano when he came on a couple months ago to talk about the Tyndall view, which absolutely amazing to have in desktop, but it's not a scripting tool at all. It's something that is I forget I'm not as code technical. There's another term for it, but it just doesn't do scripts. And he says specifically, Power BI Desktop will never be a pro developer tool. It has pro-like features to make it easier for business users, but anybody who is a pro model developer or advanced developer will need external tools such as DAX Studio or Tabular Editor, and Microsoft has no plan or intention to enter that market for those. So that will be kind of the conversation that I think partially drives the stream that we have coming up with Daniel.
Yeah, and I think that's the way most of us develop, right? In the pro world, right? Is that you just use Power BI Desktop just for the visualization, and everything else is handled by these third-party tools, right? All the model, all of that, Tabular Editor, DAX Studio, all these great things that are out there.
You use whatever gets the job done the fastest, or you do something a bit slower until you learn how to do it faster in whatever that tool is, right? Yeah. Coming to the and I can digress into this. I could talk about Tabular Editor forever. Curiously, just one thing I was wanting to ask about your back. So like the little elephant holding the stick, is that like a wand that the elephant is?
That is a drumstick I caught
from a concert
okay. Back in
I was
the
wondering.
late 90s.
Was that something thrown from
the they threw in the concert, and and I held on to it. So I've held on to it for the last however many years that is now. So since I was 16, I was at that concert, 15 or 16.
Who was it, out of curiosity?
It was Sum 41 in 99 or something ridiculous. So yeah.
I saw them recently at some it was like a punk rock revival. No, I think they opened for Green Day or Offspring or something like that recently on a tour that was here in Seattle. But yeah, I saw them within the last couple of years.
Yeah. Oh, nice. Yeah, I'm on a bit of a nostalgia trip because I was in Bristol a few weeks ago and seeing some of the old venues. So yeah, so user group. It's nice.
That's cool. No, I mean, if you could ever catch a pick or one of those, especially like the one that was used to play, because nowadays they'll grab like a handful of picks and throw it out of the audience, but it's not the same as the actual one that was used to either strum the guitar or play the drums. So that's a fun keepsake.
Yeah. No. So yeah, it's stayed with me.
But continuing to pull the conversation towards what we'll be getting into today. It's your first time on the channel, so part of the fun is just to have a bit of a chit chat. But if you can give a little introduction about yourself, what you do and everything, I think that would be a great place to kind of start with before we get into the discussion of the demos today.
Yeah, of course. Yeah. So I'm a Microsoft MVP, like yourself. So been that for 4 years now. Probably more importantly, I'm a chartered accountant. So I've just recently done my CPD actually. So I come from an accounting background. I've worked with very large organizations and small ones. So I've kind of seen across the financial statements. I've done video courses on P&L statements, and I've written a book on income statements and semantic models, which is the topic of today.
And the
101.
Well, exactly. And like how long would you say you've considered yourself inexperienced with like working with financial data, modeling, visualizations, just within that spectrum?
Yeah, so I've been working since Power Pivot came out. So early days of kind of the engine, right? So with financial
Excel 2010.
So yeah, so a long time. I couldn't give the exact year. I used to be quite advanced with Excel, so I've kind of developed ribbons and stuff like that before in the past, and had like a Monte Carlo simulation for all sorts of stuff. But that was a long time ago. I think Excel's developed beyond my capabilities these days, but it's still super powerful. So that's how I got into it. So I was a big early adopter of that within Excel to do the reporting, and obviously Power BI, which is at the next level along of the tabular object model.
Yeah, I mean, it's kind of there's an irony is the catchphrase these days for a while has been like, Excel is not a database. Like it's kind of hammering on like don't use it for such, but in a way, like semantic model is not a database, but for the uninformed, it can sometimes seem like one because it does follow star schema designs and all this other stuff. So it is kind of funny that like as much as that gets trumpeted when Power Pivot came out, it's like, oh wait, we can actually kind of use it as a database because it compresses the data well and we could make a model out of it. So it was kind of an interesting back and forth that it went for a while. When it was the only place to park it, we started dumping all of our data into there, and these I remember the heyday of having 500 megabyte Excel files, not because they were on sheets, but because the semantic model was so big, and you could only refresh it in SharePoint and all this other stuff before we finally got shared data sets. Yeah, it was it kind of went back and forth for a little bit. Before Power Pivot, do not use Excel as your data storage. Oh, you can use Excel as your data storage. Oh no, wait, we have Power BI. Don't use Excel as a data storage anymore. It was definitely a little bit of bipolarism that went back and forth as the products evolved.
Yeah, and I think bring it back to sort of finance use cases, right? I think all the research that comes out is sort of still the majority of companies, right? 3/4 are doing offline financial statements and calculations, right? As all the research in Harvard Business Review about a year ago. So it still happens. Excel is still used for all these things, right? And hopefully what we're going to cover today is, you can still use Excel with more powerful techniques in Power BI as well.
I mean, even added Python has like the scripting options now with it, with some of the advanced stuff. So for analysis, yes, Excel is still great, ideally as long as it's ingesting data from a good, clean semantic model or data source, typically in Fabric or Power BI. If you're ready, we can also get started on some of the topics as well, and I can flip over to one of the shared screens.
Yeah, let's flip over. I'm ready to get started.
Excellent. There we are.
Great. Okay, I can see it all coming through. So so today, kind of already touched upon it. I've called this P&L semantic model, but it's income statement, P&L, interchangeable terms. So today kind of would be great to cover off sort of 4 topics on P&L semantic models. First of all, I'd just like to level set just exactly what is the P&L, and then what is a P&L semantic model, just to kind of make sure we're on the same page, and we'll sort of cover off a couple of demos in there in doing that. They're going to move on to sort of cover the challenges, the difficulties with producing P&Ls, right? I think I've already seen some stuff in the chat about how difficult this is. So hopefully So I'm not preaching to the choir here, but I'll kind of cover what the challenges are, and we'll deep dive into one of the particular challenges and sort of how we can overcome it. Then once we've covered that, I kind of want to go into sort of the accelerators. So yes, it's a challenging problem and it's a valuable problem, but there's sort of tools and things that you can use and a bunch of resources that you can use to really accelerate your development, and you don't have to do it all from scratch when you start. And then finally, just going to sort of tick off the benefits just to cover off. So that's what we're going to cover today, and I'll get started. So the income statement is obviously a really important statement that's produced by entities. It shows how much profit or loss you're making. So it's really, really key. And obviously any of that gets distributed back to our shareholders, who are ultimately the people who own the company. It's a P&L, really key document. It doesn't show everything, so it doesn't include cash flow and things like that, but it's still a very important document. Kind of the way I like to explain the income statement is using a Sankey diagram. I think it's just the best way to kind of explain what's going on here within an organization. So kind of here on the left-hand side, we've got our sort of revenue streams coming into the business. So in this case, we've got product revenue and service and other revenue. And then what we have is all of that sort of drifting away, leaving our profit at the top. So for instance, the first thing that comes out is our cost of revenue. In this case, it's product cost and service and other costs. And that kind of leaves us with our gross profit. And then after our gross profit, we strip out all of our operating expenses. So this can be things like our research and development, our sales and marketing, general administrative, and that leaves us with our operating. We have to pay tax generally, and we end up with our net profit. The next thing that happens is we have this sort of controlling and non-controlling interests. I won't go too much into the accounting on this, but most large organizations will consist of lots of legal entities. So it won't be one legal entity, and sometimes they won't own 100% of that legal entity, but they have to report all of it within their books. So then it gets broken out into the part which is controlling interest to the shareholders of that company, and the bit that isn't. So that's how we end up with our controlling interests. So this is a P&L. This is a P&L Sankey diagram. I've kind of got all the code from it. It's written in a visual called DNEB, which I know you've spoken about a lot on the channel before. And sort of the benefit of this and having a Sankey diagram this way is you can have lots of different views of your P&L. So here we've broken it further into the products that make up revenue. And we've got views like this as well, which rather than using the sort of standard color formatting, we're using red to indicate negative and green to indicate positive. So revenue being down 9% versus forecast is the wrong color there. And service and other revenue being up. Operating expenses, obviously expenses going up is a negative. So that's the kind of the P&L, and hopefully I've kind of level set, everyone's clear on what this is. I'm just going to check the chat, see if there are any questions. But do you have any reads? Should I check?
Yeah, no questions specifically. A few people just talking about some interesting ways to do model design, but they're gonna do a side connect separately from this. So
that sounds like a good idea. Okay, so that's the profit and loss. So kind of a more sort of common way that's presented, and this is Microsoft's financial statements from 2023. Is like this. So it's got all the key metrics that we were just speaking about. So all your revenue, the costs, operating income, net income, and then we've got the number of shares which is in circulation, which is used to calculate our earnings per share. All right, so I want to kind of flip over to our demo. So let's go over to the first demo. Okay, so here we have, again, this is Microsoft's financial statement. Just say, obviously all numbers, I've just made up all the numbers here, right? I don't know what Microsoft budgets are and stuff like that, but it's the layout for their financial statements. We've got a few things going on here. We've got our actuals still coming through. And then typically, and these are the ones that you commonly see, we have a comparison versus prior year, which we can see here. And then we've got an absolute percentage difference. Typically, we have we might have one forecast, we might have two. Quite often we have a top-down forecast, so that's the very senior team saying top-down, this is what the forecast is, and that's not a very granular forecast. But then we also have a bottom-up forecast for the business, and quite often we have a version versus plan or versus budget, if you prefer. I think one of the first things just to call out here, obviously an increase is sometimes a positive outcome, but it's sometimes a negative outcome. So obviously an increase in revenue here is a positive, but an increase in cost here is a negative. Okay, so this is one way that you can display P&L, and on the right hand side here we've got kind of lots of different views. And these are kind of the standard kind of views you'll see. So when you speak to most businesses, you'll be talking about current month, quarter to date, full year, or year to date, sorry. And then the full year is made up of a combination of actuals and forecasts. See, each time I change this, we get a different set of metrics here across the top, and this is using field parameters. And I know you've had guests on to speak about field parameters as well, but they're obviously a really powerful tool, and when we're doing financial reporting, they're really key because you.
And I'm guessing that's it's a custom group
visual
name that has like 3 or 4 metrics below it. Is my assumption, right, for the view name?
Yeah.
Yeah.
I will show how it works in a little bit more detail. Yeah,
Nice.
I've got it linked, a table linked to a field parameter, but I'll show that in a little bit. Because there's only obviously 2 measures in a standard table visual, right? But obviously we're returning far more than 2 measures, as hopefully everyone can see. One of the other big things that comes up with finance, obviously most companies operate in multiple different currencies. So you have this concept of overall performance, but you also have this concept of the performance that was due to FX and the performance that was due to the underlying business. So that's because I'm here in the UK, you're based in the States. So I do £500 of whatever that could turn up in a certain amount in USD today. But when I planned it, the USD rate could be different. So we could have differences due to underlying Forex movements. So one of the things that we see quite commonly is we go to year to date, is that we have our Forex movements. So we take our actuals and we kind of retranslate them into, so these are actuals for the year, but retranslated at last year's exchange rates or retranslated at the forecast.
That's nice.
This isn't the only way to do it, right? It's not the only way to do it. This is the way that most large organizations do it. You can do it other ways. If people are interested, I can share a white paper on sort of the different ways you can do it. But the most common way is to take actuals and retranslate them. It's really important because what you get from that is you get the underlying performance, which is really key because now you can see the underlying business performance. Which is obviously really crucial, right? So I may have missed target, but I may actually have hit my target. It may purely be because Forex has moved adversely against me over the period. All right, so you want to know what's happening with your underlying business. All right. The other thing we've got is multiple P&L layouts. So if I just switch over, got sort of layout versions. So this is an internal version now. So we're no longer matching published reports, but we have things like percentages which are brought in. We've now got a dynamic format strings within Power BI. Previously, we had to do this with calculation group format strings. So one of the really nice things is dynamic format strings, which make our life a bit easier. Okay, so that's all the kind of standard stuff, and that's the stuff that I would expect to see across most large organizations. That's all pretty standard. There's also kind of a bespoke element. So in this case, we're explaining the accounts by legal entity. It might be you explain them by management unit. It might be you explain them by customer, or however you explain your particular account, right? This one's by legal entity, and we've got a standard parent-child on here. I'm sure, I know you've had Marco on a few times, 4 or 5 times, haven't you? So I'm sure at some point he's spoken about ragged hierarchies and the parent-child.
Yeah.
But so I don't know if we can reference back to which video that's from, but this is for standard parent-child hierarchy. I'll just quickly actually flash up the slides just to show what's going on here, because this is quite important when we want to control security. So what we can do is we'll have a look at this organization. So this is the organization we're looking at today. We've got the parent company holdings with 3 subsidiaries, and then they've also got other subsidiaries beneath them. So this is a ragged hierarchy in some respects. So Almeida, we're going to be able to view a security view where she views the entire company. So we give Almeida access to company holdings. When we go down to Clayton, we're going to give him access to company logistics, and then he views company logistics. And then we've also got Hertha, who only has access to the company retail in Canada. So let me just quickly just bring up the security just so you can see it working, because there's some interesting stuff happening here. So if I bring in Almeida, pick all the companies. So nothing happens with Almeida. We've still got the entire company view. But as soon as I go down to the next level, Clayton, we're now restricted to just company logistics US, so just the Americas, and Canada, Mexico, and USA. And you can see now the top-down forecast here has disappeared, right? Because the forecast is top-down, it's generally just done high level. So quite often with forecasts, you need to control them at different levels and only show comparisons depending on the scenario. So that is how the security works, and that's generally how the model works. Just going to go through just quickly how this is kind of working a little bit behind the scenes and kind of the performance of it, and then we'll look at how it also works and integrates with Excel as well. So if I just go up and run Performance Analyzer, which is, where's Performance Analyzer again? Here we go, into View. So I'm just going to quickly run the Performance Analyzer and we'll have a little look at what this query is doing. So you'd say it's fine. Okay, so for those of you who don't know, each visual sends a request to the Power BI semantic model, and then it returns the required data. And obviously that request is sent using DAX. So I'm just going to copy that query and I'm going to run it in DAX. So this is using a field parameter, as I mentioned. So the first part just returns which view I'm looking for. In this case, it's the overall year to date. So the way that I've got this modeled is we've got where we're making the filter selections on the page, and that's filtering parameter. So just quickly show you what that looks like. In fact, what I'm doing is I'm going to do, instead of year to date, I'm going to do current month just to make it a bit easier. Let's go. So that's the field parameter. And here's the selected measure. Okay, so we'll go back and just quickly change this over, but we're going to be selecting current month versus forecast and plan, and the view type we're going to be picking is overall. That's the currency assumption, and that returns our self-service measure order 1. And then what this does is then follows through this relationship here, out everything in the field parameter that's got a 1 against it. So let's measure. Where's my field parameter? Here it is. So everything with a 1 against it. So we're going to be returning these list of measures. We select this through. Here, I'm just going to change this over to the current month, so we're lined up on the DAX query view. Current month overall, run the DAX query. Perfect. So yeah, so we've got overall current month. And then off the back of that, once it's retrieved which of the field parameters it's using, we then get all of our results. So notice it's returning a lot more columns of data than the measures we had, and that's because it's doing a few other things as well.
Yeah, because it looks like you have format patterns. Yeah, a bunch of other stuff. Okay.
Yeah, exactly. You got it. Yeah, so we need the layout, the line. We need the primary key from the layout table to order our income statement right. Otherwise, it's going to try and do it alphabetically. We've got all of our format strings, and as you've already mentioned, we've got all our hex codes as well. Okay, so return the color that appears on the visual. So as I mentioned, sometimes an increase is a good thing, and sometimes it's a bad thing. So we need to kind of individually return the hex codes as well. We can't just show everything positive in green and everything negative in red.
I mean, you basically, yeah, you need a flag per cell, per row, whatever, that will identify which should be colored what.
Yeah, exactly. So yeah, so that's how it's working. And then I'll just kind of quickly go to DAX Studio and just show that running there. It's always worth looking at DAX Studio and the performance you get off of it. So this is not a huge model. It's around 20 million rows. We'll quickly run it, and it'll be useful for us being able to see so when we build a semantic model, we build it and we use DAX, but we can query it using multi-dimensional as well, using MDX as well. And we do that through Excel. So I'm going to show you the DAX query, but then what we'll do is we'll put a query trace on, and we'll have a look at the MDX queries being sent as well. So DAX query. So server time is here. If you've not used to DAX Studio, well, you've got Daniel on next week. I don't know why I'm talking about DAX Studio. Basically, this will give us what the performance is like. Go for it.
Nice. So you just do a control. Just do a control zoom just a little bit on the code just to make it a little bit bigger.
Oh.
The mouse wheel or whatever.
So you can see
that's not too bad at all.
These 44 measures are returned in around 2.5 seconds. Okay, this is obviously running suboptimally. This is running on my machine. So there's things that you can do like large format stories, which create segments of 8 million rather than 1 million. So this will have 20 segments of 1 million rather than 3 segments of 8 million or 8, 8, and 4. But it returns, it's pretty optimal considering everything that's doing. And while I've got DAX Studio, I'll quickly put a query trace as well so that we can have a look at the Excel. So one of the nice things, and one of the things that you absolutely have to do with financial solutions, is provide an Excel solution to it as well. So I'm using the Excel here, but obviously you can connect from Excel directly, or you can connect from the Power BI service directly in. So let's just let Excel just open itself up, and we'll quickly build out the Excel. There we go. Okay, and hopefully you'll see how quick and easy it is to build out a P&L if you have your data modeled correctly. So I'm just going to drop in my actual rate. I'm going to pick our internal version. Let's drop our line names on. And okay, so straight away, we've kind of produced a P&L, right? Which is really, really powerful if you're in finance. And then what we can do is we can just use rollup tools. In fact, obviously, with this P&L, we can drill down, right? So we can drill down to our accounts. We can do that on the subtotals as well. One of the really important things to know, and a lot of people don't know this, but you can use OLAP tools up here within Excel to convert everything into formulas. And then you have a formula for total revenue that you can use within your Excel. You can use this anywhere, and you can treat it exactly like a typical formula. And this is really powerful because if I was to have the same number just as a static, this one won't update because it's just a static number, but this one will update. And I could have 50 Excel books, I can have 100 Excel books, it'll still remain up to date. If it's connected to my local host, it will be connected to the Power BI API, so it will just remain up to date with your latest actuals. So it's kind of a really powerful way you can integrate Excel with Power BI. I'm sure, Reid, you've all seen this before, but yeah, these are the types of queries it's firing in the background as well. I'll zoom in on this. Let me just bring up the query and format it. So these are the queries that are being fired in the background when I'm interacting it with it in Excel. You can see they're Excel queries because they're MDX. So yeah, that's what's coming through, and it returns the results slightly differently, but it's still run it. But still, you get all of the data that you need. So there's the actual figure coming through. Okay, so that's the kind of the main demo of kind of the report working. Are there any questions before I move on to kind of explaining sort of the challenges and how we go about doing this?
One person who was very excited, Donald, loved seeing the cube value that popped up onto the screen a little bit earlier.
Yeah, it's super powerful, right? Because instead of having all these Excels, you just have, yeah, you can link to it. It's really powerful. Okay. All right, let's jump back to some slides. Okay. So how do we go about doing this, right? Well, I think, Reid, I've got to be careful here because star schema, right? Everybody tells you to adopt a star schema design, and MS Learn directly point you towards Kimball and others and the definitive guide to dimensional modeling. I think the challenge we have is if you open up the Data Warehouse Toolkit by Kimball and Ross, on chapter 7, they kind of talk about dimensional modeling is designed to analyze an individual line of the financial statements. So it's designed to analyze revenue, or it's designed to analyze T&E or research and development. It's not designed to produce financial statements in their entirety. And that's kind of one of the major challenges, right? Yeah, so that's kind of the big challenge. All right.
There you go.
So I'm going to go into the challenges now. I'm going to not go through all of the challenges, right? There's lots of challenges with this type of thing, but I would rather kind of deep dive into one of the challenges and kind of make sure people understand what's actually happening under the hood and kind of sort of step by step what's actually happening with the DAX.
I was going to say, I would assume one of the challenges is just the setup, the creation of it.
The creation of
the modeling, right?
Yes, yeah, 100%. So I'm going to kind of come to this a bit later on, but one of the things is the inputs and the outputs are the same for across organizations, or they're very similar. So you can actually reuse the same model near as over and over.
Tabular editor scripting.
Kind of go into that a bit more later. Yes, there's stuff that you can do to kind of automate it. Now, not 100%, because there's things that are unique to your organization, right? How you explain your accounts, but you can reuse a lot of it over and over. So I'm not going to go through all the challenges, but kind of we've seen some of them, percentages, subsets, presentational challenges with ordering, multiple layouts, and then there's all this kind of setting up with to work with Excel and to drill through. Okay, so the big problem I'd like to talk about is the non-additive subtotals, the fact that 1 + 1 doesn't equal 2. And I know this kind of causes a lot of confusion out there, but I kind of want to talk about why that's the case with finance and sort of go through a Power BI demo just so we can see what's actually happening. So this is a extremely simplified P&L example, right? Not going to go into any complexity here. So we've got a revenue line made up of 2 accounts, trade revenue and returns. So this is nice and easy, pretty straightforward. So revenue less returns, that all adds up. 100 minus 5 is 95. Costs, similarly, nice and easy. Plus 50 minus 7, it adds up to 43. When we get to gross profit, see 100 minus 5 plus 50 minus 7 does not equal 52. And that's because we're basically taking the 100 minus 5, and then we're subtracting 50 minus 7 in order to get to that plus 52. I'm just going to talk through why this is done from an accounting perspective.
Or display, better said, I guess, displayed that way.
Yeah. So I'm kind of going to go through the why it's I think just try and distinguish between the calculation and the way it was displayed. We can get into the I know the International Business Communication Standards are currently looking at, because I was chatting to them about different ways of display. But yeah, so I'll talk about it in terms of calculation. So when it comes to revenue, we have this concept in accounting of credits and debits, and actually everything in accounting ends up being zero. That's why we've got something called the balance sheet or the statement of financial position, because every time you enter a credit equals the same as the debit. Okay, so it nets out to zero. So when we do revenue, we do credits less debits, which gets us to 95. So that's why our calculation works the way it does. And then when we do costs, because it's an expense line, we actually treat this as debit less credit, which is how we end up with the plus 43, because we're taking the 50, subtracting the 7. And then when it comes to the gross profit, we are doing credit less debit for the line, but then for these two accounts, we're treating them as debit less credit, same as here. So that's kind of why we end up with these differences. And you end up with this gross profit, which doesn't seem to make sense, of 52, but that's how it gets there. Obviously,
I dropped a couple of links for people for IBCS just in the chats since you mentioned it. It's a really great standardization of visualization that, especially around finance and matrix type tables, it's universal key basically to help us all speak the same language when it comes to visualization and reporting. Just as a quick mention.
Yeah, no, that's really good that you covered that, because I did kind of skirt over it, right? Yeah, it's really important, and the standardization is, I think, needed in this area, where everybody seems to want to present things slightly differently. So the other, obviously, you can do this calculation differently. So if you're doing a waterfall chart, you need your gross profit to be additive and treat everything as credit less debit. So you can do this as well. The problem is you end up with trade costs being one value in one context and then a different value in another. Okay, so how do we actually sort of handle this and solve this from a modeling perspective in order to get these non-additive totals? Sort of, fortunately, there's a kind of a nice handy mathematical shortcut, right? Because we can say that credits less debits times minus 1 is debit less credit. So that means that we end up with a fact table with just a single measure in it, which is credit less debit, and we can times that by minus 1 to achieve the inverse. And that's kind of the crux behind the solution. So on the right hand side, we've got our fact table, and then here we've got our dimension table. So the way what the DAX is doing under the hood is we're selecting a particular account. It's calculating the max of an indicator column, and this is either 1 or minus 1 to indicate whether we want credits and debits or debits less credits. And once we've got that max, we can then just follow through the relationship, and we can times the value by 1 at the end. So in this case, we've selected a revenue account of 17K, we've times it by 1, it's remained as a credit less debit calculation. When we pick an expense line, the maximum is minus 1, and we follow it through, and our credit less debit column of minus 7 gets times by minus 1 to turn it into a debit less credit calculation. That's how it works and fits together.
Yeah, okay.
Okay. And then when you have your subtotals basically work between a range of lines. So gross profit is between lines 1 and 2. So it'll go the max 1 and 2. It'll create a calculated table. and then it will just continue to flow down the path. So again, we'll take the max of the indicator. In this case, it will take 1, and then that will ensure that the calculation is a credit less debit calculation. Okay, so that's the crux of how the solution sort of fits together and works. And what this means, and I'll show you a bit later on today, is that I then don't have to rework my model. I don't have to rework my DAX. I can change the layout table, and I can change how that maps to the accounts, and all the DAX and everything will remain the same, but I'll get a completely different layout for my P&L.
It really just boils down to the hierarchical structure, right? For the ledger and all that stuff. Yeah.
Yeah, exactly. Yeah. Okay, but I can quickly sort of show that now. So, yeah, we have our. Let me just pick a nice simple one, just rather than picking all of them. Yeah, we have here our accounts. We have the first two are sort of line items. They link directly to general ledgers, but then total revenue is a sum, subtotal from to between these two. And kind of you pointed out earlier on, we then have all of our format strings. So these are very similar to the Excel format strings that you'll see if you're familiar with them. So these just determine how they're displayed. I've got sort of 3 levels of these, and this is because what we want to do is when it comes to actuals, we want to show them without pluses or minus. With variances, we want to show pluses and minus, and then we want to show percentages as well at the end. And that's kind of one of the principles of the International Business Communication Standards, right? Is you want to be able to look at something of, System 1 and System 2 type thinking. With System 1 thinking, you want to be able to immediately look at something and know that's a variance. And because it's got a plus or minus next to it, I know that that's a variance immediately.
Now, curiously, just on 2 things. One, you said similar, like the format code should be the same, right? Like it's just the same format language. It's like if you copied any of those into a format string in Excel, any of these strings would work, and vice versa, right?
All of these ones would, yes.
Yeah.
I don't know enough about the engine between the format strings. My understanding is there are some slight differences in how it works. So
fair. It's
kind
of like a
it's very similar, but it's minor.
Very
minor, yeah. Go on. Yeah. But all of these would work. Yeah, all of these would work in Excel.
Yep.
And that's part
any of the standard ones. And better said, I think it's any formula string you've ever used in Excel will work as a format string in Power BI. There just might be a few more options, I believe, in the format string engine in Power BI than there are in Excel. It's kind of how the DAX language is inherited. A large majority of Excel functions were moved into it, and then they added more. So I think the format string kind of follows a similar train of thought. Is you could basically lift and shift any patterns you've had from a format string perspective, but then I'm sure there's some extra nuances you can enhance it with, but it at least lets you come from the Excel world to the Power BI world with the same set of predetermined strings that you prefer as your standards.
100%.
I do have a question.
The one note. Go on, yeah, go.
I actually have a question that I just saw pop up, so let me put it on screen here. From Marlon, and you might get to this, or so how does the format string get from the column? Basically, how does the format string, I think, get from the column into the formatting?
Yeah. So historically, we would have used calculation group format strings. That's the way it's been done in the past. But now we've got something called dynamic format strings within our measures. So the best practice is now to use those. And hopefully, a simple selected value in the dynamic format string. And that's picking up the format string default. And obviously for the variance and the variance percentage, I'm not using the format string default. I'm using the format string percentage and the format string absolute variance. But yeah, the dynamic format strings, really powerful. And they are now GA, aren't they? I'm relying on you here. I'm pretty certain they're GA.
Yes, I believe they're. I mean, it's a little hard to remember sometimes because there are certain things that are kind of forever previewed due to various reasons. But I'll double check why you continue, but I'm fairly certain those are GA by now.
Yeah, I remember because when I was writing the book, I had to write about how to enable the preview feature because you have to write which version you're against. So, yeah. So let me quickly show you as well. So obviously we've got this one layout.
I would say, I mean, like, at least on the article that I'm looking at from Microsoft, it's, I mean, it was updated last year, but create dynamic format strings for measures. Article from 4/20/24. It says it's in preview then. So either Microsoft forgot to update their documentation, or it might still be in preview. I would hope they wouldn't, because they're normally pretty good about like not having stale MS Learn docs. Because I just did basically dynamic format strings Microsoft, and that was the top result. That is the latest article anywhere in Microsoft Learn for it.
Okay. All right.
I guess the easiest way to, well, yeah, you keep going. The easiest way to find out is I'm just going to go to the options, and I'm just going to see if it's in the preview settings, because you'd have to turn it on in there, right? If it's in preview.
Yeah, you would. Yeah, that's right. Yeah, I'll let you double check in the background. I thought it'd come out, but honestly, one of the challenges of this industry is keeping track of what's in preview and what's coming out.
Yeah, exactly. Keep going.
So one of the things that I'm going to quickly do here is, and I've just got this kind of artificially done in the background just so you can see it. I'm going to switch out the layout, and I'm going to switch out the accounts to change the layout of the financial statements. So here I'm just quickly commenting out the layout, and I'm going to quickly do the same with the accounts, and just bring in a different set of accounts for a different company. Or different mapping, I should say. So just changing two tables, the layout table and the account table, and what we'll see now is what we should see is a drastically different P&L.
Fingers crossed for Murphy's Law.
Yeah, this is now running a bit of fun here. There we go. There we go. So we can see now we've got a very different layout of our P&L. Not very different, but different enough. Different revenues, different costs for a different company. And this is another Fortune 500 company's P&L. Prizes for anyone who can guess whose it is. So yeah, so really powerful. I think this is kind of the point which I'm going to make next, which is this stuff is really difficult. There's lots and lots to think about. There's lots and lots to consider. However, the problem is very similar from company to company, and you don't need to do it from scratch. You can just reuse what's there already. And one of the things that I do when I go into a company and I do pre-sales, I'll download their accounts from online. I'll take their layout, I'll pop it into the template, and I'll just produce their P&L. So I've got something to show them that's actually their P&L with false numbers, but I've got their data. And the reason for this is that's kind of twofold, really, is the inputs are the same or very similar, and the outputs are very similar. And that's because companies build out their P&Ls based on something called the trial balance. So the inputs are based on this double entry bookkeeping, this credits and debits. And this is the same. It doesn't matter whether you sell oil or whether you sell marketing, right? Spend. It's kind of, you're still going to be doing credits and debits. You're still going to have expense and revenue counts. And there's an element of bespoke, which I spoke about, all to do with how you explain your accounts. On the other side, the output is also very similar, right? You have to follow very strict presentation rules. So there's a thing called IS1, presentation of financial statements, which sort of sets out how the accounts have to be laid out. And and there's other accounting standards as well, so around earnings per share, where you can't even use a different font for your earnings per share, right? It has to be the same for your earnings and your diluted earnings per share. So it's quite rigid, but that helps us, right? Because we've got similar inputs and similar outputs, it means we can kind of basically reuse a lot of the same model, and we can adapt it for dimensionality. I think that's one of the key points, right? Is don't try and do it all yourself. You can download and you can get these resources. And the PBIX that I've been showing, or a version very close to it, is on my website, and you can download it. I've kind of already done that demo. So yeah, I've mentioned my website. Let me bring it up. So I run a website called starschema.co.uk. So on there, there's a whole bunch of videos. There's articles. So for instance, there's articles around how to produce the Sankey diagrams or gather requirements and build it all through. There's an article on the posting date. I'll cover that a bit later on, actually. There's also embedded reports. So if you want to sort of show or play around with any of these reports yourself, you can go on and you can sort of use the content and play around with the reports. You can play around with the Sankey diagram. And as I mentioned, I've got a download section where you can download the PBIX and you can download some other files, which I'll talk about now. Let's just go. Not gonna wait for that to load up, but you get the point. Yeah, Vega-like code's on there as well. So the DENEB visual, you can use Vega code in order to create the Sankey diagram. That code's all on the website as well. But for me, this is one of the most important pieces. So when you start having discussions about building out your P&L, one of the things you'll get to is conceptual and logical modeling. And this is kind of the first step with a lot of clients. I really don't know how you operate, but one of the things I always like to get to is to diagrams quite early on to understand the concepts within the business. So all the ones in green are standard dimensions that you're going to see across organizations. So we kind of explained the layout to account to journal entry. Obviously, we explain things by date. So my recommendation is to do posting date as a junk dimension along with effective date, rather than just to include the date an entry is posted on. And I'm going to show you why using Excel, actually. So if we go back to our pivot table, hopefully it lets me go back to it. There we go. What I'm going to do is I'm just going to drop the posting date working group on here. Oh, actually, let's pick a period first. So typically, when obviously the P&L has changed, right? Because I've changed the model. The reason we do posting date as a junk dimension along with effective date is because what we're interested in with posted dates quite often is their relative date to the period closed. So you'll have this concept of entries made after the period was closed. So after period 8, so say period 8 closed on the 31st of February. Today would be working day 7. And you'll have entries posted. So quite often they want to know the journals related to the date. That's why I kind of generally recommend you model this as a posting date. There's a kind of an article on my website, a blog on my website, which kind of talks through this in a bit more detail. The things that you need to be wary of, so all of this is standard, are the things that I've got here in orange and red. So you'll also want to explain your accounts. And this is the bit where you need to do a bit of work yourself, right? There's the bespoke element of your company. So this is the legal entity in the example I showed, but it could also be something else, right? Like management unit or customer. Broadly, these come into 2 different categories. You've got what I call the uniform dimensions. So these are the ones which every single account can be explained by. So, you know, your depreciation, your amortization, your revenue can all be explained by a legal entity or linked to a legal entity. Something like customer might only be linked to your revenue lines. You know, it might not make any sense to talk about customer in terms of a depreciation or an amortization, or it might not talk about vendor and the tax accounts, right? So it's key to determine what uniform dimensions what you've got and what non-uniform dimensions you've got. And then you can have a conversation about how you want to treat those non-uniform dimensions. Yep. So you can either basically just say, I'm going to have an unknown, and that's going to, all of my tax will fall into an unknown customer, right? You can do an accounting thing called activity-based costing, where you allocate it all out. as well. And there's some other things you can do as well. But yeah, but it's important not to get caught out, because quite often you get asked things like customer P&Ls, and then you look at their data and, well, of course you haven't explained tax by customer. So then there's a whole bunch of data engineering work to do, and you kind of want to know that up front. You don't want to get caught out by that halfway down the project.
Yeah, exactly. As early as possible to nip any of those in the bud, the better, you know?
Yeah, and that's a definite watch out, right? And customer P&Ls is a classic example, because, yeah, how do you want to treat it? And the allocation conversations can completely blow out the project timelines alone, because there can be a lot of debate, right? Especially when it's, you're responsible as a stakeholder for driving profitability of a customer. It's a very political conversation.
Yeah, it's fair.
Yeah. So yeah, that's definitely a watch out. These are just logical diagrams for the same thing. So we've got whether it's an attribute, whether it's a surrogate key, and the data types. So again, I think this is really important. So these, again, you can download them from my website. They use diagrams.io, which is a really amazing tool for building out diagrams if you want to do it. And you can basically download the files and you can amend them and add in your own dimensions. So when you're having conversations with your stakeholder, you've got the resources there. So again, that's in the download section of my website. Just download them, use them as you see fit. But I'd strongly recommend doing that as part of your stakeholder conversations.
There is one nice thing a little bit about being a consultant is, to a degree, we can be, it's a lot easier for us to be brutally honest, I think, from two parts. One, I personally, I'm a confident individual who doesn't feel too nervous about sharing honest opinions, but when your job is not on the line to a degree, you can almost be the Switzerland, the neutral party, to just, no, I'm going to tell you this is bad and wrong. I don't have to have the nervousness of that this is my manager, this is not politically appropriate to talk to. So it is sometimes, I think, helpful for companies to have individuals like us come in and be the people who will be honest on what's right and wrong and working, and maybe not even right or wrong, but what is less and more efficient, and how close or far away you are from aiming the target at what you should be. Because it's sometimes those conversations don't happen due to a whole laundry list of reasons. But those third-party perspectives can be very helpful, I think, to pointing a company in the right direction that they've been wanting to go, but haven't been able to have the conversations about that yet.
Yeah, no, 100%. Yeah, agreed. And hopefully sort of our community work as well, we set out kind of the direction we want to go in, and then that's helpful as well, right? It gives people a bit of confidence to say, no, it's not just me who thinks this is kind of the way it's done, right? Yeah.
Exactly.
All right, but yeah, it is easier as a consultant, right? You can go in and you can be a lot more brutally honest a lot of the time. To say this is what it is. Yeah, one of the advantages. All right, so that's the accelerators. They're really, like I said, don't try and solve all these problems yourself. I would strongly advise just kind of taking what's there and kind of reusing it. Okay. Finally, I'd like to just come on to the benefits. I think we've covered them a little bit as we go along, but I kind of just want to talk through them just so they're
just
really
also
clear.
as a quick little, I love the slide design of the fact that you have that tiny little icon that you're zooming in on with some of that. There's a nice extra layer of polish that your interactive slides have that as somebody from a visual background, I appreciate the love and detail that goes into that. I don't know if you've ever seen, I don't know if you've ever seen these online, but there's those artists that make the infinite things where it's you see it's like a vector image of a beach, and they scroll in, and then there's a reflection in the eye, and then you zoom into the eye, and there's a fantasy world, and then you zoom into the wizard hat, but it goes on forever, and it's an infinite image. That's what your kind of things reminded me of a little bit, is it just kept going in further, but it's a cool effect, just to give you a little shout out.
Well, thank you very much. So I like this kind of non-linear way of presenting, because I can kind of click on which section I want to go to, and
yeah,
you deal with stakeholders as well. Conversations tend to go not in the direction you anticipated. So with this, we're a bit more structured, right? And we're having a bit more of a kind of informal chat. But when it's senior stakeholders, sometimes they skip ahead.
Yeah, because you
and
get
again,
the slides that can link to any other slide, and like you have a a table of contents slide you keep going to, and then you can navigate the conversation anywhere with that when it's built properly in PowerPoint.
Yeah, and to be honest, in true form, I actually, I stole this off of somebody else, right, online at some point, and kind of I've
Sure.
just adapted it over time, right? So again, I
Yeah.
kind of, steal with pride and don't rebuild it yourself. And I'm kind of the same with slides as I am with Power BI models. You don't have to solve all these problems yourself, right? I use a SQL BI patterns, right? I'm not going to go and solve parent-child myself. I'm just going to go and use what they've done and they know works. So
that's any
yeah,
artist,
I'm
though,
a
right?
big
You build upon what exists.
Yeah, definitely.
Yeah.
That's my view. I'm just going to, obviously, I think we touched upon all this stuff, right? But just kind of functionality, right? I think one of the things you can do is you can avoid Excel hell, right? So you can have 50, 100 Excels, but they'll all be pointing towards the same data source. And if that data source updates, so will your data in Excel. So that's a really, really powerful part of building this semantic model. I think obviously multiple layouts is another benefit. And sometimes what will happen is an organization will change their P&L structure from one year to the next. With this type of approach, you can have multiple layouts and you can kind of see what it's going to look like next year. Or if you're in next year, you can kind of look at back using the new structure. So that's quite nice as well. You can drill down from subtotals. So one of the benefits of modeling it is, let's pick a variance. So let me just switch this back to Microsoft, and then I'm just going to switch it back to Microsoft. So one of the things that's really useful is you can drill into the subtotals and kind of explore the detail behind them, as well as the individual line items. So I'm just going to switch this back. So I'm going to change the layout back to Microsoft. And accounts. Oh, I did wrong.
Missing one. There we go.
I should have done this in Tyndall, shouldn't
I? Right? Yeah.
I have. It's so
you can also it's a
right?
good use of parameters in there as well too, because you can have a little drop down where you can just toggle and then it flips all of your queries and stuff.
That's true. Yes, 100%.
Makes it great for PBITs too. Then you open it up, you like pick one of whichever design you want to have the model built into.
Yeah, I kind of got this. So what I'd like to do, I haven't quite got visioned how I get it all tidied in, but use an API to extract all of the income statement structures for the Fortune 500 companies, bring them all in, have them and then have a report that does you can just pick the company. It'll just have every Fortune 500 company's P&L with dummy data.
That'd be a pretty cool demo. That'd be a cool demo.
So
yeah.
I then don't need to. Every time I go into a new client, I've already got your P&L structure. I've already got it all set up, and I don't need to be there. Yeah, me being lazy anyway. But again, that's something I'd like to do. Right? Not there yet. So one of the nice things is you can drill into the subtotals. So we've got net income here of down 41,000. I can kind of select net income here, pick a line, and I can use something like a decomposition tree to kind of go through and understand where that comes from. So that minus 41, I can see it comes from Americas, USA, and I can see that the majority was due to expenditure. So this is obviously just one way of visualizing it, right? But the point is that you can drill into the subtotals as well as the individual line items, and you can see all the detail behind them, all the way down to the entries.
The decomposition tree is so nice about that. But yeah, being able to kind of do a combination of both, I guess, like a measure group and categories is really nice. To be able to start from that, it's like whatever that final variance value is, and then get the breakdown, mixing the decomp tree with the series of filters and then field parameter selections. Yeah,
I think it's really powerful. If you need to understand what's going on with your P&L, right? Again, all visuals can be utilized. So DNEB, the Sankey diagram, etc. So that's kind of the functional benefits of doing it. But I think there's also a set of non-functional benefits. So if we change the layout, the DAX and the model doesn't need to be reworked. Kind of shown that already. Security, right? You can kind of you can follow the hierarchical structure of the company and just put it at whatever level, and it will kind of flow all the way through. And from a testing point of view as well, having all the logic in a semantic model means you just need to test the semantic model. You don't need to kind of have individual testing of visuals as much. Which obviously, if you use a lot of visual calculations, that's one of the challenges. I think one of the things I'll add in here as well is, because everything is based on credits less debits, pretty much everything is based on credits less debits, we're going to have UDFs soon, user-defined functions, which are basically global variables, and Reid, you'll know about this. But that's going to be really useful for financial solutions because we can reuse the same user-defined functions over and over again, hopefully. So one of the things I want to do in the next year is try and reduce the code base and use global variables to build an even slicker solution when Microsoft release it. All right. It wouldn't be a tech talk without talking about AI. So one of the things you can also do is there's this thing called semantic link. I know you've had people on to talk about semantic link already. And actually, we've actually got one with a client at the moment. It's gone into production. But what you can do is you can extract your data from your semantic model. You can then run it through an LLM, and you can get it to produce financial commentary. That can then be reviewed by the finance team because the financial commentary won't be perfect. It comes out of the LLM, and then it can be fed back into your semantic model. This is really powerful, right? Because you can get the LLM to do the first pass of financial commentary. So that's definitely something that you want to check out. And that's another benefit of having your income statement in its entirety model, right? Because you've got all the logic there. You can then fire it across, and then you can, in the future, I imagine you'll be able to combine it with PDFs and stuff that talk about things, right? So that's really powerful as well. And AI Skills now supports queries to the semantic model as of last week. So AI Skills and Fabric is also there as well. So I would say lots of benefits to modeling your income statement. The majority of companies, by all sort of research that I read out there, still do a lot of this stuff offline. So it's really powerful if you can get to a situation where you can model it. All right, and that's everything I had to cover, Reid. But I'm happy to stay here and take as many questions as people have.
Yeah, let me see if there's any more. Nothing at the moment, but for any remaining questions, here we go. From Van Lessing, I did have one. So let me the right thing up. I missed this a bit earlier. Then listen, your thoughts on using calc groups for like, and this might have been a bit earlier on one of your P&L tasks. So we can avoid using external layout structures and build it completely in the calculation group. So rather than maybe having to have a table, just essentially integrating that just in a larger body of DAX text, I would guess, if possible.
Yeah, so generally I avoid calculation groups. I'm more of a fan of using C# scripting to script out the model and script out the various different types of calculations that you need to do. I mean, it's a personal thing, right? I tend to avoid calculation groups. I think with UDFs coming down the line as well, I think that will become even more an effective way of operating, that you'll just be able to have the global variables, and then you'll just be able to, your year-to-date calculations and stuff could come through. I don't know, we've not seen how they actually work, right? It's just been announced, but as a rule, I avoid calculation groups. I think one of the main things is, I always say you've got to earn the right to use things like calculation groups, because it's another layer of abstraction on top of your DAX and your model. So if you build a really good model into it, then
it's a little bit of a shotgun approach with stuff, because it unless you specify, like, because you can in a calc group say ignore certain measure names, like if selected measure name equals this, don't apply it. But like I've definitely had times with calculation groups where if you have any measure that's a like text or something and it's trying to do year to date or other stuff, it breaks, right? Because it can't apply, because it's a blanket, brushstroke on everything, and you have to add a lot of if statements and switches to account for that. Where what you've used a lot of is, I think, the build parameters, which can do a lot of what a calculation group can do, other than you have to build kind of a measure at a time. But if you have a script that can build out your 30 measures, and if you use Tabular Editor or TimBuildView to migrate the field parameter a table with groups and all the other stuff, you can build something nearly identical, but that is a bit more bespoke on like every measure, every column, every group is designed specifically with whatever is needed in mind for that. So like all scenarios can technically be built in either or. I do think there is a bit of a where are you most comfortable? Kind of like can a calendar for the model, should that be built in DAX or Power Query? I don't think there's a better or worse option. I think it's where is your patterns most like, and where have you been most comfortable building those in the last 2 years? So it's still it depends. But to your point of the UDFs, the user-defined functions that's been talked about, I think as we continue to get more and more batching and scripting to use parameters and create measures and all the other stuff, I think calc groups will be needed a little bit less for these things, and they'll kind of be remaining for those universal patterns, which is the like month to date, quarter to date, year to date, the things that are like running totals, time intelligence, the things where you want to quickly turn on and off stuff for visual or like for pages. That's where I think they'll remain. But for financial stuff, I think they'll be needed a bit less as we get more of these other options available to build out these custom matrices and P&L statements.
Yeah. I think I've just been bad because I've gone to clients, with 180 tables in their models and bidirectional relationships and 7 layers of calculation groups, and I've just gone, what's going on?
Yeah. 7, yeah, no, like, yeah. I would love to look at the query plan. Like, go to the performance analyzer, export the query plan for that. Like, that's I'm sure there's a little bit of code that's presenting in there. Okay, actually, here I got one from Greg's on. All right, let me pop up another message. He always has. Yeah, that's a surprisingly short question from Greg. He usually posts the very long technical questions, but I think this is a good one. So how will UDS, so user-defined functions, help when you've only got 2 measures in the model? Also, if I could ask from you, Chris, it's mentioned. Can you just briefly summarize what these are as a mentioned item of an upcoming feature from Microsoft?
Yeah, of course. Yeah. So these are not even in private preview yet, let alone public preview or generally available. They are basically global variables where you can define a particular set that you can then reuse over all of your measures. So you could define something that then you just reuse. So you could define whether you're doing credits less debits or debits less credits, and you could just reuse that over all your measures. So we've not seen how they actually work yet. So this is quite theoretical at this point. I would say UDS won't help when you've got 2 measures in your model, right? Because you could just duplicate that logic in both measures, right? But if you have 50, you could then start to have the benefit because you could have that one and then you could use that same logic over those 50 measures. But when you've got 2, yeah, it's not. Yeah,
it doesn't quite paste into there. So they're Jay over on the Reddit forum is like, yep, they're adding UDFs to Power BI to allow to define pieces of reusable DAX code that you can use from other places. You basically reusable DAX you can use across the model via measures and columns. This will be different from Fabric UDFs, which are built in C# and they cannot be used in DAX. And this is all that Microsoft can officially say at the moment. And this was a couple months back. So that is the official, at least Microsoft description of those. At the moment from a Reddit feed on our Power BI. It's a good question, though. I'm excited for those. I think that's going to be, it will almost be as not quite as, but nearly as transformational as when variables got added to DAX back in 2016, something like that. Like, because the amount of optimizations that allowed for it, but we're just taking that and we're making it more universal. I think it's going to be really interesting, and the amount of templatized workbooks that people are going to have, or you'll have starter files that will already have all the stuff set up, or C# scripts to add 15 common UDFs that would be useful in any model. I think there's going to be a lot of the starter kit stuff that's going to come out for that. So I'm quite excited to see the possibilities of that for financial modeling or just Power BI in general. From a nerdy perspective, I think it's going to be really cool.
Yeah, no, I'm very on board with it, right? If you can reduce your code base down significantly because you've got you're only having to define the same calculated table 10 times across 10 measures is really painful, right? If you can have it once and reuse it, it's brilliant.
Yeah, exactly. There's there's definitely been plenty of times where I've had like table variables that are defined in 5 or 6 different measures, which each measure has different logic as the end result. But there's 15 lines of code that I need to do to create this a special date table of something that's an iterated table, and then be able to park that into a universal spot and then reference that would be lovely. Especially even if consider maybe that on a page it's cached once, it could be used in 7 measures. That's my only other hope. I don't know if it's going to be it, but I would hope that maybe if something becomes a universal variable, maybe the query engine can cache it separately from the visual and reuse it, almost like the there's an option on the model where you can tick it on where the query is the same for different users. It can reuse that. I would wonder if that might be part of the optimization as a thought, but that would be pretty cool.
Hadn't even thought that, but very true.
It would be a massive performance boost, right? Because native visuals already share libraries. It's one of the reasons custom visuals take a tiny bit longer to load is they're isolated for security purposes. But if there's any way for a page to share resources of any base attributes of calculations or queries, I'm sure that would be massively efficient for large models. Fingers crossed.
There's no doubt. Yeah, it would be. But,
I do have one other question
that you can do with Marco or Alberto.
I love it when either of them ever come on. Marco loves to talk DAX, and he's always a fantastic guest. There's one from Hani that I don't think it's specific enough for us to be able to answer to, but I at least want to acknowledge the question. So how to show P&L forecasting methods in the visual. That was just popped in recently, but I guess do you have any examples of displaying forecast that we can maybe just show?
Yeah, of course. Do you mind just flipping back over to my my desktop again?
Yeah.
So the way that I tend to manage this is for your forecasts and your plan, have a single scenario table. And then with that single scenario table, you then put in the credit less debit value, and then you put in the dimensions. If you don't know a dimension, i.e. you want to show a blank, you use another key like -2, and you just write the DAX so that when you drill to that granularity of ownership, it's just going to show as blank. The kind of reason, we can flip back now to our screen. The reason I like to do it this way, I think in particular, is you can then just have one table, and imagine in the future, you've got that one table sat in a SQL database in Fabric with Direct Lake. You could have your 5 billion rows of your general ledger coming in input mode. You could then have a Direct Lake coming in for and you could just update your budget in the SQL database, and then just have it come straight into your reports and into your Excel and flow everywhere from your semantic models. Exactly. So I think that's really key, right? Is you can have that one table in your SQL database and then use a key to determine whether you want to show blank or not when you drill down in the granularity. Because like I mentioned, you have those top-down forecasts, which only very, very high level. You also have those bottom-up ones where they've got lots of detail. So hopefully that answers the question. But I think that's definitely one of the things that's coming is, being able to forecast straight away and it flow through. I mean, it's not immediate, but it's seconds, isn't it, before it shows up?
Exactly. Let's see, any other questions? Greg just maybe mentioned a little bit about technically tables can be shared through detail rows expression and a few others, which is good to know. But yeah, no other questions, I think, from the chat. But we've had a good amount of audiences. We still have 32 people hanging out with us at the moment, so that it's nice to see this many people getting excited about financial. But it's kind of one of those universal things that are across almost any company of a substantial size. To me, I think the two big ones is everybody needs finance type statements, and then it's HR stuff. Those are kind of the two kind of universal categories across most orgs. Is some amount of reporting that needs to be done for financial statements, and some amount of reporting for either headcounts or performance, utilization, things like that. Almost like universal templates that if you work for a company, likely they could use as reporting help on those cornerstones.
Yeah, no, 100%. Yeah.
Any closing remarks of resources, anything for people to check out? Again, an encouragement maybe to check out your blog or videos or anything else that I can direct people towards for continued learning on what we talked about, or to either check out anything that you've done or maybe chat with you if needed.
Yeah, so I think the best place to reach out to me is either through starschema.co.uk or through LinkedIn. Obviously, my book is there as well. That goes into a bit more of the weeds. So it goes right into like the accountancy of non-ownership, but also into the technical weeds of the model as well. So yeah, those are the kind of the resources. But everything's on my website, or contact me on LinkedIn. Thank you so much for having me. It's been a real pleasure. It's really really good to come on.
Absolutely. I'm just trying to see if I can get the link. So this is the P&L Fundamentals. Is that the book? Or is that? Yeah. Oh, there it is. Order. Yep. Income Statement Semantic Models.
That's it. You can.
Yeah. Okay. I just wanted to make sure I could link to that thing. Yep.
If you read that.
Excellent. There we go. Drop the link into there. Excellent. Yeah, Chris, this has been fantastic, and I'll be seeing you in a few weeks. Yeah. At the summit.
Indeed, yeah, I'll be flying up to Seattle very soon. So yeah, looking forward to it. Should be a great time. It's always good fun this summer.
Oh yeah, I'm excited for it. So well, then with that, I'll give you back the rest of your Friday evening, and thank you so much for coming on. And otherwise, I'll see you in a few weeks. And for the chat, thanks for the questions and conversations. And I'll see everyone back online next week.
Thank you, Reid. Thank you everyone for joining. Cheers.
Absolutely. Cheers.
Thank you so much for watching. Please consider hitting that like and subscribe button. And if you want to help support this channel, take a look at our channel memberships or our merchandise store for cool swag. And last but not least, please consider sharing this video on your social media platform of choice to help our channel grow. So, until next time.